Hi everyone, Chris here over at Williams & Co Trading. Just coming to you today on Sunday the 17th of March 2019. I just wanted to do a video as opposed to the live webinar today, purely because I want to go through a lot more than I usually would. I'm going to be covering around 20 different currency pairs today, all the US majors, some of the euro crosses, the pound crosses, yen crosses, stocks, oil, precious metals, Bitcoin, everything. As we've had a bit of a break. I think we didn't have a full webinar last week, so a lot of people are wanting to see kind of my view on everything. So just going to hit the ground running here and take a look. I'm just going to start with the euro. So the euro dollar looks to have made 5 waves since hitting this high at wave B. If we just count this, 1, 2, 3, 4, 5. Now what we're actually looking for in the longer term is for this black wave count ABC. I mean, how deep it goes, I'm not sure. 100% extension would be what's realistic. So what we're looking for is essentially more downside. However, there's an opportunity here for what would be a counter trend long position. So what I'm looking at on these small 5 waves we've had would be a blue wave 1. Okay, as we know, wave C should have 5 subwaves. Okay, so this blue count we've got is essentially the internal waves of wave C. They're the subwaves. So once we've had 5 here for wave 1, I would expect 3 up for wave 2. Okay, looks like a leading diagonal pattern to me, just because these kind of lost a little bit of momentum, and they weren't quite. It wasn't quite. Basically, this bottom trend line wasn't quite as steep as the top one. Okay, so it's essentially a kind of a wedge pattern. So I'd say it's a leading diagonal. There's a few alternate scenarios that this could be. One of them is on the right hand side. It's purely based on, if you have a look here, this momentum indicator, we had a low in the RSI. Okay, I think every time I hover over it that arrow gets in the way, but there you can see we had a confirmed low. And what we like to see when a market is bottoming, or at least we've got a wave 5, which technically this would be, if I just label this. When we see wave 5, we like to see some divergence between 3 and 5. So when this makes a new low, we like the RSI to go higher. But as you can see, we've had a confirmed low. Okay, so there's potential that this could try and post a new low, which means at market open, this would just crumble and fall. However, this move has been pretty strong to the upside. This bounce is fairly strong in nature, so I'm favouring the bullish view, at least in the short term, in that we'd at least, you know, come up and create a blue wave 2, you know, complete this. So what does that mean in terms of trading? What that means is, for opportunities this week, I would like to see a pullback in the euro when the market opens tonight, and I would like to see 3 waves. So I'd like to see an ABC pattern of some kind. I'd like to be slow, take its time. If it has to take, you know, 3 days for us to get down there, that's better. The slower it is, the better, because it means that there's no momentum to the downside. It just means that we're simply correcting. People are taking some profits. So I want it to be slow and choppy, and I don't want it to go too deep. Obviously, we like a 618, always offers a good risk reward. So somewhere around 1240 could be a place to watch, as long as we see these 3 waves. Okay. To the upside, what we like to see is as an extension of this first leg. Right, so we take the first leg up, we measure that. Let's say we get the 618, we measure there, and it targets, you know, 1410, which actually has got previous resistance as well. So we could head to somewhere around there. there's another alternate scenario, which are possibly a long shot on this one. It would be that this huge cycle we're looking at for blue wave 1 has completed actually down here, which would mean that the upside to this is phenomenal, and we could go up towards 120. Now it's a long shot, like I say, can't see that being very likely, but I think regardless we're going to see some more upside here. I can't imagine after a strong move up like this that we would just fall straight down. While we can't rule it out, I think it's less likely. So I'm watching the euro for that small correction on the hourly, and then we can extend to the upside, take a long position here. Now the next one I want to look at is the Swissy, and that is because the Swiss franc and the euro are correlated. They're not 100% correlated, but they do move somewhat together. So I'm just going to go over to the dollar Swiss. The correlation they have is inverse. So what that means is when the euro dollar is rallying, the dollar Swiss tends to fall. Okay, so there's a few different things we could be looking at here in the Swissy. If you have a look at the left and the right, we've actually got two different counts. If you look at the red numbering, we've got wave 1 completed in the same place, regardless. You know, I'm looking at the same thing for red wave 1. The differences in the counts is where wave 2 ends. Okay, so it's possible that we've finished wave 2 already, okay, and that we're now continuing higher. So this would be red wave 3 that's about to start. And I'll just have a look at the fib extensions on that, where we can expect it to go. So if wave 3 is the same length as wave 1, it can go up here to 103. Okay. Usually we get a 1618 on wave 3, which is probably going to be a lot higher. Just ignore some of these other numbers for now. So we could be pushing maybe 104, 105. So that's this scenario here on the right. Okay, that's a very bullish scenario, that we're probably going to bounce immediately on the market open. It would mean that I've seen this strong move up as a wave 1 of 3. Okay, so we're in red wave 3, this would be sub wave 1. And then we've had our A, B, C, which is a flat correction. We're now in a 50% 618 area. It's a good place to bounce. So if we're going to do it, it's going to happen somewhere around here. Okay. Alternate scenario is that wave 2 is still in progress. Okay, and that the subwaves are A, B up there, and C will come probably retest that area of wave A and wave 4. So we've got a lot of support here down at 99. So in terms of the Swissy, how does this relate to the euro? Well, if the count on the right is correct and we head straight up, that would mean that this euro count on the right is correct and we go straight down. Okay, if the count on the left of Swissy is right, we actually need to see 5 waves for wave C. Okay, so this black wave C should have 5 smaller waves inside it. Okay, so if we look at this, that could be 1. We could have a pullback for wave 2, and then we get 3, 4, 5, right? And that would put wave C here. The count would be, you know, pretty much perfect, and that would complete our wave 2. So in either situation, we should get some kind of bounce, right? If this is going to be a wave 2, I would prefer it to be, you know, more corrective in nature and quite choppy, right? As we've said, the longer it takes and the slower it is, the better. You know, if you wanted to take a short position in the Swissy, you'd want to see this very slow, kind of overlapping 3-wave correction, and then of course you can look at short positions. So in both scenarios, the dollar Swiss is going to go higher. But the euro, we're going, you know, we've got different directions, and we're preferring the euro to go up. So that kind of contradicts it a little bit. So here's how we trade it. With the Swissy having 2 possible scenarios where they both go higher, the best way we can play it is to take a long position at market. So when we open Sunday night, take a long position Okay, you can maybe have your stops, I would advise somewhere around here, 99.25-ish. Okay, because even if this is going to be a flat, it can't just go straight down. We have to have some kind of bounce somewhere, even if it is corrective. Okay, so we could come a little bit lower, you know, test that 618. If I copy it over to this side, come and test this 618 and then bounce. But I think regardless, you know, if we start coming down here to 99.28 without a bounce and this just heads straight down here, you know, we're wrong and we just want to be out of the trade. We don't want to be long the dollar Swiss if it just starts to crumble and fall down towards this 99.25 level very rapidly. But we have two scenarios where we should head higher. So that gives us a better likelihood that we're going to go up. So we take a long position. Put our stop loss somewhere here at the lows. That would invalidate the pattern if we get down there. So what would happen in euro dollar then in that situation? So the euro dollar could just get this small correction, right? Let's say the dollar Swiss does head higher and we start making some pips. We have to watch the euro, depending on what the euro does. If the euro goes down like this, we're okay to stick with the dollar Swiss. If the euro does three waves and they're small, right, and the dollar Swiss kind of does the same thing and has three small waves up, we take, you know, the very small amount of profit we'll have made, we want to take that off the table, and we can either flip short in the dollar Swiss and we can get rid of this count, or we can take our long in the euro, okay, with stops at the lows. So that's what I'm going to be doing on market open tonight, is I'll be taking a small position in the dollar Swiss. It's up to you guys if you want to take a 1% on that or a full size position at 2%. It's entirely your call. I'll probably take a 1% just because really the main trade for me is this euro. Okay, it's just that if the euro doesn't quite play out how we want it to and we get this alternative scenario where it heads straight down, that's going to boost the dollar Swiss and we can make some pips on that instead. Okay, so all we're doing is we're just increasing our chances, increasing our likelihood of having a profitable trade. Okay, so the next one I want to take a look at is the pound dollar. Now, the pound dollar, if we take a look on this chart on the left, we've had, we're actually in a much longer term wave 5, blue wave 5, okay, which takes us right down below, I think 1, it takes us below parity. Within that blue wave 5, we have red wave 1, and now it looks like completion of red wave 2. Okay, so we can expect wave 3, which is usually the strongest wave, to come into play very soon. I'll just quickly take the length of wave 1. Okay, actually, sorry, bear with me. I'm going to actually measure it here. So that was, is that 1700 pips? Okay. So the potential downside here could be at least 1700. Okay, so it could take us way below 120. So, how do we play this situation? Well, it looks to me as if since wave 1 we've had an A, B, C, which is a flat correction, okay, and wave C I'm measuring as an ending diagonal. Now an ending diagonal is a very powerful reversal signal, but it can only be valid once we break down outside of the ending diagonal. Okay, so if it's a bullish ending diagonal, we want to break down. If it's looking like a bearish kind of wedge pattern, we want to break above. In this situation, we're looking for a breakdown. Okay, now these aren't perfect. There we go. So we'll be waiting for a breakdown in the pound before we trade it at all. In terms of opportunities for this week, it's probably not going to give us anything this week. Probably not anyway, it's not likely. If it does, it's likely it'll take us to the end of the week anyway. I can't imagine this breaking down, you know, Tuesday, giving us a pullback on Wednesday to take a position. I feel like, you know, it could take until Friday to break down, and then we're going to look for a retest, or we could just take it on the break. So as soon as this price action, you know, if it comes down and gets to here, and we get a close on the, I don't know, hourly, the 4 hour, you could even look for a close on the daily if you wanted to. you can take the position, you know, as soon as you get that close, or you can wait on a pullback. Sometimes with any diagonals, they're so strong that you might not get that pullback, and if you do, it can be very shallow. So sometimes it can be worthwhile taking it on the break. Ended diagonals, you know, they return to at least their point of origin, which would be, I presume, this level here. Seems to be where it's coming from. I don't think it extends back to the spike. Oh, it kind of does, almost. So it's debatable whether it began way back here. But you tend to join up just waves 2 and 4 in the diagonal patterns. So if we said, you know, for argument's sake, 128, if you took that on the break, let's just put one of these in. So let's say we head down and we break it here. Right, that would be next week sometime. We'd have to put stops at the highs, which we don't necessarily have to put it back at the very highs. I think once we're outside the wedge, we're going to stay outside of it. So if we break down, you know, maybe even if we wait for a retest and it's somewhere up here, you know, let's say we get this breakdown like this, and then we get an ABC, you know, we could get in at a decent level. Okay, so that would be, let's just move this then, you know, 3180, let's say. We could put our stops, you know, a little bit tighter than the highs. You know, we've got an area of interest around here, so we could put them, you know, somewhere around that point. And our downside minimum target, minimum, would be these lows. You know, chances are we're going to head at least to 124, this spike low, maybe even lower. Okay, we can expect at least some downside in the near term to give us, you know, even if this isn't a wave C and it's a new bullish leg, we still want to see 3 waves to the downside, don't we? So we should still see some downside regardless. So once we break down, if we get in and we play it simply to this wave 2, what risk reward does that give us? It gives us a 3.25 to 1. Okay, so that would be the play if you're going to play it. Okay, and what would be interesting actually in this situation is the euro pound, purely because if the pound, you know, is weak and breaks down, and you know, if we are heading way below 120, if the euro dollar, remember I mentioned this bit of a long shot, but that maybe this big wave 1 ended here, wave 2 could take us right up here, right to 122, which means the euro is going to scream higher over the next couple of months. The pound could break down below 120, you know, which then makes the euro dollar a higher price than the pound dollar. So we're going to see euro pound above 1. So if we just take a quick look at the euro pound, what I'm currently seeing since we've hit this red wave 5 is 3 waves, right? 1, 2, 3. WXY I've labelled them as. Okay, it's possible we're in a triangle, so I've drawn that in purple. That would be a secondary count, and that would mean we need to see a lot more of these 3 wave moves. Okay, this first one would be an A, then we need to see 3 waves for B, 3 for C, 3 for D, and 3 for E. Okay, once we get that, we then can push higher and break out this triangle. Okay, if we're not in a triangle, we can just head straight up from here. You know, once we take out 90, there's a chance that we can get to 1. So while we're watching the pound breaking down, if it really does, you know, over the longer term, head below 130, below 120 even, then we want to be watching the euro pound for a breakout on this triangle. So this is the daily chart, so it's a little bit longer term. And it's worth noting that while this triangle is drawn in, it's not necessarily had 2 support areas yet. We need to see 2 touches of a trend line to make it valid. This can actually come lower first. You know, we could see price action drift lower first. So it's not worth taking any kind of position on this. We've got 100% extension down here at 84. So it is possible that if there is a triangle, we might come and retest. We might come and test this level down here first. But there's not really a valid setup, but it's going to be interesting to watch purely based on what the euro dollar does and what the pound dollar does, and it may present an opportunity, you know, if we do break out longer term for a retest of it and take us above 1, which, you know, that's some huge upside we could have. That's where 1 would be. So it's it's really good in terms of risk reward. Okay, next up is the Aussie. If we take a look at the Aussie dollar, we've had this spike, this lovely spike that we had in January. Since then we've had a strong move to the upside and what looks like an ABC correction. So now what we're looking for is continuation of this upside. You know, we can expect at least 3 waves up for an ABC. It'll take us into resistance zones. We've got, you know, around 74 and 74.50. Now we look to have completed this ABC. If you have a look on the right hand side, this chart here has 3 waves for a bigger wave B, okay, black wave B. What we need to wait for, we've had our first confirmation that this is turning bullish, okay. First confirmation is that we overlap wave A, okay, because what that means is that this can't be anything impulsive, right, because if that was wave 1, that was wave 2, here's wave 3, 4 has now overlapped 1, right, so it can't be anything impulsive unless it's a diagonal, okay. So if I drew in a diagonal, let's just see. I presume it would probably work. So something like this. Now that is a wedge pattern, okay? So it's possible that this isn't an ABC, okay, and this isn't a wave B. The alternative would be a 5-wave move in a probably a leading diagonal, could be an ending diagonal. It's hard to say because this spike kind of screws everything up a little bit. Okay, but either way what we're looking at is possibly 5-wave impulse. Okay, whether we get a correction to the upside that stops here, you know, at 72, or whether it's an end diagonal and we head up here to 74.50, you know, it's debatable. Well, what we're looking at is potentially we could see one leg lower here. Now there's no trade to take if we're heading lower. Okay, the only trade to take is on this one is bullish. So if we come down, we want to probably wait for a break of this wedge, and then we can take a trade against, you know, with stops at the lows. Alternative is if we're correct with our you know, our initial count, these 3 waves are corrective, and now we're going up for wave C. It would mean that this blue ABC count is correct, right? We can get rid of the wedge, get rid of these 5 numbers there, and we can just head straight up from here. The second confirmation of a bullish count is when you break above wave B. Okay, now in a lot of cases I would take a trade once we break wave A. If it's clean enough a setup, I will. In this case, just because there's that possible count that we could get a 5th wave lower, I'm going to stay aside until we get confirmation above wave B. Now wave B is only 120 pips away. Okay, so let's just say that that situation plays out, and you're probably thinking, well, it's already moved 120 pips, how much more upside is there? Well, it could go to 74.50. Okay, so the way we play it is, let's just say this was wave 1, we then get wave 2 correction, okay, then we break out for wave 3 and we test that wave B level, right? We're going to test this level, we then get wave 4 and then wave 5. What goes up must come down, okay? So once we see that 5-wave impulse, that confirms that we could be heading to 74.50 after all, right? So we just wait. We wait for 3 waves down, and we can then take a long position, right? So if we came back down to here, 71.40, we could have 300 pips to the upside, with stops, you know, around 100, 150 pips. So the best situation really is to just wait on this one. As I said, we've got the alternate count where it can come down here, so we're best off waiting first. Get a break above B, and then look at buying pullbacks. Okay, so that's the Aussie. Now the Aussie is correlated with gold. Okay, so let's take a quick look at gold. Now, we have an active trade alert in gold, and the reason we had taken the trade is we'd seen a completed 5-wave impulse. If you see this blue wave count, completed 5. We have potential trendline resistance up here as well. So this could be a big triangle that we're inside. So we've taken a short position, I think somewhere around the 13.25 area. We seem to have fallen pretty strongly. If you look at the hourly on the right hand side, just clean this up, get rid of those channels. Okay, and what we're looking at is possibly we're in a wave 4, completed that wave 4 actually. Now I think we have stops around 1310, and we should see a wave 5 lower. Now there's a possibility that wave 5 was actually already done, so that would mean that this is wave 3, wave 4, and that's wave 5 completed. But we've had an ABC. Okay, so whether it was 3 waves, whether it was 5 waves, we've had an ABC higher. Now this can turn into a double zigzag, which is A, B, C, and then it has an X wave, and then another ABC. Right, so we can go higher. I'm not sure on the likelihood of that. I'm really not. Ideally, I'd like to just stick with this first count, and possibly, you know, just a regular ABC. No double zigzags, nothing too spectacular. I think, you know, even if 5 did end here, this is an ABC. That's good enough for me. So this should just continue to the downside. Whether it stops here at 5, you know, for a 5th wave, around 1270-ish, or we just head straight down to test this channel support. You can see on the left, that comes in at 1250, 1260. The longer we take to get there, the higher the number is. But that would be a black wave 4, which we expect 3 waves. Okay, so this was our first one, this strong wave down. That was our correction, probably completed. I think that was late last week. And then we should see our 3rd wave down there into 1260. How does that play out with the Aussie correlation? It means that we could actually see this final 5th wave. Yeah. So if the Aussie comes down and we see that final 5th wave, we might get a small correction. Because we've had 5 down, we'll get 3 up and then another 5 down. It means that this count would be wrong, and that this Aussie is simply going to make a 5th wave, bounce, and then just head lower again. And that would play into the hands of gold because of the correlation. Now, like I say, these things aren't 100% correlated, but they do tend to give each other a leg up. What that means is if we were looking for a long position, we probably don't want to be short gold, because you'll just probably be hedging yourself. And what I mean by that is hedging is simply where you take both sides of a position. With gold being, you know, so strongly correlated with the Aussie, if you were still short gold and took a long position in the Aussie, you're essentially negating both positions, and you're kind of flat really. You're not actually positioned in the market at all. You're not really in anything. So the way to play this, like I say, if we wait for the Aussie to make that 5 up, what that means in gold is that possibly this really strong move was the end of a correction. You know, we only really get strong moves at the end of a correction when it's a flat. Okay, so that would mean that we finished a cycle here at this high, and then we had an A, a B which went up to new highs, and then wave C which completed there. Again, that's not very likely, but it's a possibility, and you know, I have to let you know that that can be, you know, an option. But right now, as it stands, gold does look bearish. So if Aussie, you know, heads up, it could just be that the correlation maybe breaks down temporarily. Yeah, so unfortunately the Aussie and gold, they're not really lining up for us. So there isn't really any action we can kind of take on it. And it's just more of a waiting game just to see how the correlations play out. The next I want to look at is the dollar Canadian. Now we look to have completed an ABC correction here. If you check this black wave count here, that would be a blue wave 2 completed. Okay, so what we're looking for is more downside. We want to complete a 5 wave cycle ideally, because the larger wave count is a big ABC. From over here we had 5 up, and then we've had an A, B, and we want this to be a big wave C down towards 125. It's been a key level, 125. So how do we get there? At the moment we actually have a short position in this pair. I think we had really wide stops up towards these highs, but now that we've turned around the 50 and 618, which are really key areas where we should be turning, now that we've turned there, we've pushed stops a lot lower, reduced our risk, Okay, and we've got stops just at the highs now. So that would be at around 34.40. So the next thing what we want to look at, of course, is downside continuation. But before we get that, as you can see, we've had a strong move down, so we've been able to push our stops lower. Now what we want to see is a correction. Now it looks like, I'm just going to zoom that in a little bit, that could possibly be a 3-wave correction completed. We did nearly tag our 50%, which is a pretty key level. So it could be that this correction is done. And now we can head lower. Okay. We have overlapped this wave A. Confirmation, of course, is when we overlap wave B. Could also be the case that we've had maybe A, B, C, and then we're getting a X. Yes, we get an A, B, C, X, A, B, C. It becomes something a little bit more complex, okay? So that would be a double zigzag. At the moment, I've not added anything to this position. I've just taken advantage of this swing lower to tighten up stops. Now, if we continue to chop around, you know, and we do keep taking our time going sideways, and we can get to 50% or the 618, I would like to add to the position. That's what I'd be looking for at the moment in the dollar Canadian. Whether the weakness is dollar weakness, you know, like we've looked at the Aussie and the Euro so far, it looked like they could break higher. It could just be dollar weakness that drives this lower. But what we also have to take a quick look at, because you know while we're in a gold short, that could be due to dollar strength, right? So it's a 50-50. You know, we're not 100% sure on where the dollar can go and whether it's the dollar that's driving all these markets. It could easily be that the Canadian is the one that's driving it. You know, that's where it's useful to look at things like the pound Canadian, the euro Canadian, and try and work out where things are with those. The best way you can actually look at it with the Canadian dollar is with oil. Okay, because oil, Canada are a huge exporter of oil, so your best bet is to look at that correlation. So if we just head over to crude oil and we'll see what we're looking at there. Okay, so crude is kind of interesting. We've got possible leading diagonal in this blue count. We've actually got RSI divergence, so this would mean that we've got crude weakness coming into the market, which would mean that dollar Canadian should head higher. Okay, so if crude comes down and the dollar Canadian continues to come down despite that, that would mean that it's a dollar move. It's not an oil move. It's not a Canadian move. It's a dollar move, which would mean that being bullish euro and bullish the Aussie could be really good setups. But with crude at the moment, I wonder if there's an alternative scenario on this. It could be that instead of having 3, 4, 5, this is actually ABC. So if I just, sorry, let's delete that. So let's say this 5-wave pattern was complete here, or possibly here. Difficult to say. There could have been like a wedge here at the end, or maybe an expanding diagonal, something not so pretty. But what I would be tempted to say is that if this is a corrective move to the upside, so if we're going into like a wave B up here, we'd have had a first leg of correction here, so that's wave A. That we then have 3 legs up into new highs, which is wave B, and then we'll have a big correction lower for wave C. Okay, so there's 2 possible counts there that are showing weakness in crude. Okay, what this could mean is that dollar CAD just rallies. But as I've said before, sometimes correlations can break down, and you know sometimes we're wrong as well. Sometimes that you know we have to close out of a position because you know the market wants to go the opposite direction. It wants to change what it's doing. Okay, but all we can do is obviously take our make an effort to count it as best we can and show at least the most likely scenarios. One other alternative is that this was the ABC. Okay, now what that means is that this was a first leg higher there from 43 to 54. Okay, so an $11 rally. We then fell maybe $2. Now this can continue higher, and we can maybe get another $11 to the upside, right? So that would lead us to 62. Take a look at this on the left. I've actually put in a Fibonacci extension based on this wave count on the right, and the 100% is at 63.25.35. So 62 is in that area. It's between the 618 and the 50% of this really strong leg down as well. Okay, but we are in the vicinity of somewhere where we could just reverse. Okay, because we're near the 50%. Okay, next thing I want to take a look at is the Kiwi. Now Kiwi's a little bit messy. I've got a lot of counts going on here. But essentially, what we need the main takeaway from this is we've had a strong leg up. Now we've got this sideways choppy business. We could possibly come down here and test these levels. I don't think we'll get back to 66. I think we are going to be in a triangle regardless of how we look at it. I think this could create a triangle for wave B, and then we'll head higher for C. There's not really a bearish outlook on this. I don't like the look of it. You know, if I was looking to short this, it would be way up here at 70, 50. There's nowhere else really, not while we're chopping around, that interests me in the Kiwi. And there's not that many really correlations we can look at. Again, it does correlate a little bit with the Aussie and with gold, but not really strongly. So with the Kiwi, it's a bit of a mess. My counts are also a bit of a mess right now. A lot of this stuff just isn't required, and I think, you know, there's not really much point trying to count these internal waves at this stage, just because we're sideways and chopping around. I think we just have to look at the longer term structure, which is strong wave up, sideways chop, strong. You know, we're looking for another strong wave up. It's possible that, you know, we break down, but it's hard when we've not had a second level to, you know, we haven't got a level to line this triangle trend line up with. If we'd have had a spike down here, you know, we might have something we can use, and then say, well, if we break down below this, we could take a short position. But right now we've not even kind of tested anything down here, so that's what I'd be looking for, just to confirm that we actually are in a triangle. But right now there's really nothing of interest on the Kiwi. The next thing I'm going to take a look at is the dollar yen. Now the dollar yen, I've taken my counts completely off this, and we're just looking at pretty much just looking at a bullish channel now. I would be tempted, I mean, if I was going to count it, it would be something like 1, 2, this could be 3, and maybe we get 4, 5, and we get another spike up. However, we could be in this purple triangle, which means we only get 3 waves up. So if that was 3, it would have been A, B, and C completion up there. If we take a look at this, the best thing to probably do, if you wanted to take a position in this, is wait for this to break down. We've had this it's kind of rolled over here, and possibly 3 small waves there, and now we can look to maybe break down. Again, how much downside it has is debatable, just because we could be in this big triangle, but we could see as low as maybe 105. The best thing to also look at with the dollar yen is correlations again. So if we take a look at bonds are interesting because we'd had this triangle drawn, we had this arrow drawn a long time ago, start of the month. In fact, I think we had it drawn from way back here. Probably in February we were waiting for a breakout back then. We saw a little bit more downside first. But it looks like we did have a triangle, and now we broke higher. We're actually at 100% extension here. So if we, what that is I've taken, sorry, 1 second, need that back in. So if we take the length of this first move up into triangle resistance, and we then project it from triangle support, we're now at 100%. Okay, so if we do that on the right hand side, you can see it a little bit easier. That'll be our first wave, second wave. We're now here. We take a look at the RSI, we're divergent. Okay, as some of you will know, most of you at this point, I would hope, know that when we get 3 waves back up to highs, this isn't a completed wave 5, right? If this triangle was, if we want to say this triangle is wave 4, wave 5 needs to go way up here, right? It needs to come a lot higher. When we get 3 waves, so if this starts to extend from here, we can say that this is now in a wave 5. Until that point, we can't really, and it looks like we're stalling after 3 back up to highs. Most of you will know that that is a flat correction. Okay, so that still means we're in a corrective move. Have 3 back up to the highs, right? We should now expect downside. So, you know, at least come and retest these support levels down here, and that would be our wave 4. Okay, and then we'd expect support round here, and then we'd bounce. Now this can of course extend, which will drive the dollar yen lower. But if we are stalling and we start to roll over this week, you know, and we start breaking below this 122.13 level, you know, back below all this triangle resistance, that's going to give the dollar yen a boost. Okay, weak bonds will drive the dollar yen a lot higher. So all that means is, while dollar yen is here at this support level, we could bounce. There's not really a trade here, just because invalidation levels will be so far away. You know, if this was wave A, as we can see on the left, wave A would be here. I'll copy it over. Wave A or wave 1. That would be our invalidation level, right? If that was 1, 2, 3, and this is 4, invalidation's here. You could try and put invalidation just below this channel, but it's really difficult. When we've had this spike, it's difficult to tell, you know, because we obviously can't draw the spike here, because that's just been totally invalidated. So we only have to we try and connect it up to as many points as possible, which here kind of works. If this trend line holds, I wouldn't use it, so I've stop losses below. I'd rather use my Elliott wave counts to set my invalidation levels, not trend lines. So for me, if bonds do turn, then this is going to obviously bounce. If this breaks down, we'll obviously see bonds grind higher. So really, the potential is more to the downside than up. But we have to watch bonds because they don't look like they want to go much higher. For me, I'll just be a side. I think even if we break down, I'd look for a retest. But it'll just be all dependent on this. This will have to just rip above here, pretty much. Maybe come and retest these levels, and then just scream higher from there. That's what I'd want to see if I was about to take a short position in the dollar yen. This is what I'd want to see. Okay, next I want to take a look at the euro crosses. Now this is the euro Aussie, and looks like we are in a corrective pattern at the moment. Copy these trend lines over. Okay, so we're seeing this powerful move down, which I've labelled as wave A. We're then seeing this kind of choppy, overlapping, very slow. It's not very bullish. A very slow correction. Now, wave C we've projected should at least, if I move that, should at least go in the vicinity of wave 4, which I suspect we will, which is way down at 153.50. Again, what we need, obviously, for this to happen is the Aussie to be stronger than the euro. So whether that means, you know, even if euro dollar comes down and Aussie dollar comes down, that might only be because of the US dollar. Might have a strong US dollar that drives those pairs lower. But we need to see like a huge difference in strength here. Like the Aussie needs to be so much stronger than the euro for this move to be replicated to the downside. We could actually use this to decide, you know, which trades we want to take against the US dollar, because based on this, it looks like this is going to come down, which means that Aussie is going to be way stronger than the euro. Then we go back to our euro dollar and the Aussie dollar pairs, and we say, right, okay, well, we want to be, we want to be more bullish the Aussie. So let's look for opportunities in that as opposed to the euro. And that would be based on this being correct, and not doing this, right? But with it being so sideways, overlapping, and all these words that I use to describe it every time: choppy, sideways, overlapping, slow. They're all characteristics of a correction, of a corrective move. There's nothing impulsive or bullish about the price action that we've seen since February. So that says to me that we're gonna head lower. So that is the Euro Aussie. If we were going to trade it, the best thing to probably do is wait for some kind of breakdown in 5 waves. So if this is wave 1, that's 2, we're now going to get 3, 4, 5, right? And then we want an ABC. And then we can take a short position. Or we can use it to trade against the dollar, however we choose to do it. Okay. Next up is the Euro Kiwi. Now, these charts haven't been looked at for a while, but we've got some ugly price action. I'm going to delete as much of this as I can because it's kind of cluttered. But I think the point really is that this kind of looks like a flat, just because we've reversed. Well, we're not reversed. We've retraced so deep. This is an 886, right? So we've rallied here, and then we've come back 88.6%. That's a really deep correction. So for me, it's likely that this is probably a flat. We could test the lows. So I'd be tempted just to say this is A, and we've had B down to create a flat. This could even be an expanded flat, make a new low, and then of course head higher to complete wave C of the flat, which will put this here. So I think in the short term we could probably see some strength. Longer term though, we really want to be with the trend, which is along the same direction as that. We want to be ideally short. In the short term we can take longs, but we just have to kind of wait for the right move. Again, wait for those 5 up, and then 3 down and buy it. But right now there's nothing really promising about this. Kind of chopping sideways by the looks of it. We've had this move down a little bit sideways. This could continue lower to complete an expanded flat, which would be wave B, way down here. But as we've seen that already labelled there, B could be complete. Right, so that could be wave 3 over. I do apologise for all the mess that's on these charts. You can see it a little bit clearer on the left hand side now. As for this on the right, these are old counts. We had a WXYZ, which is just some ridiculous complex correction that nobody wants anything to do with. We like it when they're simple zigzags or flat corrections. When they start getting double and triple zigzags and quadruple, and it just gets a bit stupid then. And most of the time we don't get them. They don't exist really. They're very uncommon, so I don't really like to put them into my counts. So yeah, we need to be aside on this. This isn't really telling us much. This isn't giving us much of a story as to whether the euro is going to be stronger or weaker than the Kiwi, purely because the count just isn't very clean. Okay, so that's the euro crosses. We did cover the euro pound before. We'll do the euro yen. So let's get rid of this mess. So right now, if we take a look, we could be in a triangle. Is there another wave anywhere? Let's just go out to a daily quickly. Okay, so this is the big triangle that we've got. So for me, it's probably likely that we're going to chop sideways for this. The euro yen, and until we make a decisive break in either direction, it's you know, you just got to stay away from it really. Get rid of that as well. So it has been a bit messy, and it continues to be a bit messy. We've had a powerful move down so far last week. That's the last 2 weeks, but it doesn't seem to have continued very well. We're getting quite a deep correction here. We are at an area of resistance, could turn, but again, with the longer term structure being this triangle, there's not really anything to play on the euro yen. Okay. Aussie yen likely to look the same. Okay, so we've had this sideways, so actually not much needs changing on this one. So on this hourly, then it's possible we're just getting this sideways move. Could be a really elongated triangle of some kind for wave B. Okay, once that completes, see some downside for this wave C. Let's just get rid of that, that's not important. So that will complete wave C, and then of course we'll be looking to the upside. Now the yen pairs will probably will move together, and it does kind of depend on bonds. So if we've got this triangle, wave C will be down here. Could see some weakness in the short term before we head higher. Now this would make sense if bonds push a little bit higher and then turn. Okay, so if they push a little bit higher, they might get that wave 5 that I'm talking about, which is well up here, right? So that will drive the yen pairs down. Then once we top out here and this starts to dump, all the yen pairs are going to rally together. So it's possible that if we do see bonds just keep going, that this will come down and then rally, and we'll start seeing, you know, high levels up at 84, maybe even higher in the Aussie yen. Okay, now the yen pairs I haven't really covered with you all for quite some time, purely based on the fact that we had this spike down here, and it just makes everything so much more difficult to analyze, just because, you know, you can either include the spike in your analysis or not, and it makes it difficult when you go and you start doing multi-time frame analysis as well. You know, once you go down to lower time frames, that spike becomes more and more valid, just because it's less of a spike, and it kind of closes down there. If you have a look at the hourly, we probably had an hourly close. Right, so when we're analysing it, once I get actually down there, we had hourly closes here at 70.35, but I think the 4-hour closes were much higher, around 71.50. So it can be quite difficult, and at the end of the day, I will only trade what looks like a clean setup. You know, you could sit here and say, oh, you know, I can analyze anything, blah blah blah, but if it's not clean, I'm not going to trade it. You know, a lot of people might think, well, why can't you analyze this? I can give it, you know, give it a shot. At the end of the day, I can only say what I see. It's as simple as that. I can only say to you, here's what it possibly could be, but with the spikes, of course, everything is just so much more difficult. So if I had a choice, let's just get rid of all these drawings for now. It's not exactly the most bullish of moves, right, so far, which makes me think we'll probably get a leg down. Yeah, and maybe that would be the completion of wave 2. Yes, maybe that was A, now we've had B, which is this choppy mess, and then C, because we're kind of just moving sideways, we're losing momentum. That's not to say we can't go higher, but my preferred count on this would probably be something like this. We want to see a retest of some kind of support level, and we want to see that support level hold, and then, you know, we can be bullish then, and that matches up, right? Bonds come down, bonds top out, this is going to come down, and then bonds turn finally, they start dumping, this is going to rally, Aussie yen will rally, and they'll all move together, right? Okay. Next one I'll take a look at is the Aussie Kiwi. Aussie Kiwi seems to be actually playing ball quite well. I've not looked at this for quite some time, however, the last count that we had, if you have a look on the left hand side, the red count, red wave 1, wave 2, now in a strong wave 3 to the downside, So we should probably get a little bit more continuation on this. And I think that would complete the whole cycle once we get that. Once we get that red wave 5 completed, that can be a big ABC done. If we just quickly check the daily. So we actually broke down a triangle. I'd be tempted actually, get rid of that, draw in the triangle, here and here, label it with the triangle, so this would be A, B, C, D, E, and then from wave E, once you get 5 waves down, that's usually your last, that's usually the terminal wave. Okay, so after a triangle you tend to get a terminal wave. So, once we come out of a triangle we want to see 5 down. Oops, hang on, I'll fix that in a second. Okay, so in this case, I'm quite happy to ignore that spike. I'm just going to make this blue. It's a bit easier to see. Yeah, I just want to ignore that spike because it looks like we're going to go and retest it anyway, possibly even break below it. So, on the 4 hour it literally didn't do anything. It closed back up here. So it's not really that key, I don't think. So, since the triangle completed here at wave E, we've had 1, 2, 3, 4, and now we're in final wave 5, which will have 5 subwaves. If I use one of these little fib tools, it can actually tell us where we can expect to see a bottom. If I put 200% on, okay, and a 1618. We're probably nearly there now. Yes, we're at the 1618 right now, but I would like to see us closer to this 200%. Okay, so it's possible we're seeing wave 3, almost done here, maybe going to wave 4 this week, and then we get final leg maybe next week. In fact, that could take a couple of weeks, and then this is going to just see an almighty rally, back up probably above 110, probably above this triangle resistance, back above 112. So this is something we could look at. What we'd want to see, of course, is 5 up from the lows before anything else. You can ignore the chart on the right. Not really interested in that right now. Mainly just want to use this 4 hour on the left here. Wait for this final leg to happen. 5 up. It could possibly, rip really hard into this resistance. Small pullback, nice and choppy, and then we can get some long positions in the Aussie Kiwi. And again, that helps us bias ourselves. As we saw in those Euro crosses, we saw Aussie strength possibly, right? And we saw the Kiwi not really giving us much, right? Possibly some strength. Possibly some weakness, I should say. But could go either way. So that helps us when we're looking at the Aussie Kiwi. Is that, well, the Aussie against the Euro at least looks pretty strong. Against the dollar, we could be bullish in that pretty soon as well. So this could be really coming to an end, and we could start to see some Aussie strength, particularly against the Kiwi. Next I want to look at the S&P 500. Now we did have a trade in this a couple of weeks ago. I still think that this is topping out somewhere. It's just where. It's very difficult to call a top. It's always better to trade with the trend, of course. Sometimes the market does give us a little bit, like we thought this was an ending diagonal, so it's a valid trade, but unfortunately we didn't get to where the ending diagonal began, which was way down here, 26.20, which would have been obviously a nice trade for us. But that ending diagonal now has failed, so it's up to us to really take another view of the market now. And I do think we will go to new all-time highs at some point. I don't think necessarily this is bearish, but it's worth noting that this strong momentum is curving off, right? It's giving up a little bit, and that for me just means that for now, this would be the end of wave 5. How we count the subwave structures probably would be something more like this now. Get rid of that. Yeah, so now we've got that really elongated wave 3, which makes more sense. You know, we do often get extended wave 5s in equities. Actually, so saying more sense actually is wrong. But with the standard Elliott wave structure, 3 is usually the longest. So in terms of EW, this does make sense. We should be seeing really a new high. We are at new highs. We look to be diverging a little bit here. So it's very possible that this can turn. But bitten once, twice shy, I think probably be a good phrase to use with this one. I think at the end of the day, really what we need to be looking at, you know, is maybe to buy it on a dip if we really want to get in on this trade. Now, I'm not in love with, you know, being long equities. Not ever really. Not since, well, probably not since I started trading full time a couple of years ago. Purely because if you know, if you just take a look at the long-term chart, oh, we take a look at the weekly, you know, it's just at stupid levels, right? Yeah, since 2015, we've I think it's what, like 70%, so 60 odd percent up to the highs. Since 2016, which is pretty insane. If you invested your retirement savings, like a lot of people do, put their 401k into stocks, shares, and generally just equities in general. You know, you'd have made 60% over the last 3 years. That's not bad going for something that you can just sit on. That's not an active kind of strategy. But you know, that's why I've not really wanted to buy stocks at any point really in the last couple of years, just because we're at these ridiculous high levels now. The only way for me is down, but we have to see something strong first before we can start shorting it, and I think we're going to see, you know, new all-time highs. Just I'm not the kind of person that would buy anything that's close to all-time highs, never mind at all-time highs, but you know, I don't even want to be close to them. You know, I want to buy a dip, and it's got to be a really nice dip. In this case, because we're so close to the highs, wait for a shorting opportunity. Really, I think that's the way to go. And the long term, you know, if we do hit new highs and then we start to collapse, you know, not to be a doomsdayer, but you know, it could you know, smell really bad trouble for global markets if, you know, if stocks top out at 3,000 and then they start to crumble back down towards 2,000, we lose a third in market value. You know, all your huge companies with big market caps are just they're really gonna suffer, and it'll be no sort of reflection on whether that is a good stock or share to buy, good company to buy into. It'll just be the case that the entire stock market may go under, you know, and just lose so much value. You know, at the end of the day, buyers and sellers are the people that are driving price, not the other factors. So, you know, buyers and sellers might look at whether that company makes great profits or whether it gives you dividends every year or whatever it might be. But at the end of the day, it's buyers and sellers, and if the markets start to panic and money floods out, they're going to flood out of every single stock and share, and that does affect, as far as I'm aware, that does affect these big companies that are floated on the exchanges. So it could be really bad news if we see something like that. But hopefully it won't be for a little while. And if we do see it, then it'll be. Has anyone ever seen the film The Big Short? That'll be me. Just placing a huge short position on the market. Okay, next up, we might as well look at silver because we looked at gold. Let's go down to the 4-hour. Okay, so we saw possibly 5 waves up. We actually had this spike, so it could be that if I just adjust this, wave 5 was up there on that spike. We've had a strong move down. As you see, we had the arrow drawn. It's gone just as we thought, and we're now in a corrective wave. It's possible we get something maybe a little bit deeper. This maybe comes back a little bit higher. But if it's going to follow gold, the way that gold looks, this thing is just going to come straight down. If they're going to continue to be correlated, which they are. One thing we could look at is gold versus silver. So this again can kind of help um, help you decide which one you'd rather be long or short, depending on your bias. So if we go to a daily, just get the long-term picture for a second. So generally, over the last few years, yeah, really since 2011, gold has looked, stronger than silver. If we got a monthly, and go way back to a monthly, yeah, it doesn't really give us much this in terms of long-term picture. So we kind of just have to take it as it is at face value. And right now, we're in a sort of channel, right? We're in this thing here. So it means that if you're going to be long, you want to be long gold, right? Providing we stay within this channel. Now, possibilities are, of course, that if silver maybe isn't as weak as gold when we fall, silver's going to get strength, and this ratio will go lower, right? Because this is just the ratio between gold and silver. And right now it's at 85, so we're, the price of gold is 85 times the price of silver. There isn't really much to be said on this unless we break below the channel. So there's a chance we might go and retest it because we're kind of in no man's land. We're not near resistance, or we're not near support. If I was looking at this, wanted to take a position, I'd probably wait to get long on a test of this trend line, which means that I want to see silver strength or more gold weakness, right? So if we're in a downtrend, which we're looking at gold and silver both being weak in this current market, we want to see gold be weaker, right? That's what I think. If we see this come and retest, that's what we ideally want to happen because we are short gold, and that kind of works. So yeah, for me, if I was going to trade this chart right in front of me, I'd be waiting for a dip, and then if we were bullish gold and silver, I'd buy gold over silver, right? If we were still bearish, right? So let's say that the dollar, is just on a screaming home run, and gold and silver are getting hammered, but this shows support and then starts to bounce. This means that gold's going to be stronger, right? So if we're short, we want to short silver instead. But for now, I think we're in the right trade. I just wanted to show you that just because you guys can go and do this in your own time and come to your own conclusions. It's just useful to know what correlations you want to look at, and also to use not only correlations like oil and the Canadian and gold and Aussie, but to look at correlations across the Euro crosses or the Aussie crosses, right? So like we looked at Euro Aussie, we're expecting some weakness. That can help us trade Euro Pound, it can help us trade the Pound Aussie, it can help us trade Euro Dollar, Pound Dollar, Aussie Dollar. It can help us with all of those. Once you kind of start looking at the correlations between them and how those currencies push and pull one another, and how those pairs link up, you can make the best decisions. And really what you're looking for is the absolute weakest currency and the absolute strongest one, and if it makes a clean setup on a chart, then that's going to offer you the best risk reward, isn't it? So it's just something useful I wanted to show you guys. I'm going to take a quick look at the pound crosses. Not something I really look at very often, so I'm really just going to probably just stick to the chart on the left, this daily. Probably just pull this trend line a little bit lower. I think we're still probably in a corrective channel here. This doesn't seem like anything too bullish. So if it were up to me, probably looking for more downside. Okay, in the pound against the Aussie. So this backs up our view on the Euro Aussie, right? Because the Euro Aussie, we're in a similar sideways consolidation. So maybe a breakdown of this channel could be a good shorting position in the pound Aussie. Also matches up with the pound dollar, because we saw in the pound dollar possible breakdown could be coming. Okay, take a look at the pound Kiwi. Similar situation. This channel's not quite so clean. If I delete the top one, copy paste the bottom one, connect those top two, that's a bit cleaner. Same situation again. Probably going to get some more weakness, whether it's now or we come and retest this channel again. I'm not sure, but we'd be best on you'd be best waiting on a breakdown of this. Okay. Pound Canadian, interesting cross. Exactly the same, right? I think we'd been hoping for a test of this. If we zoom out, I think that could be a head and shoulders pattern. Go to a weekly quickly. Okay, it's a head and shoulders pattern, but it's at the bottom of the market. Now, head and shoulders are usually at the top of a market, right? So you'll have an uptrend, really strong uptrend, and then you'll get your head and shoulders at the top. With this being at the bottom, it's just not likely that it's even relevant. However, the important point to note is that we've had a really strong move down and then choppy sideways, right? So it's possible that this does come lower. Okay, so it's looking like all these pound crosses kind of looking bearish. Pound yen is actually a bit more sideways than what it previously was. Let's get rid of this. So pound yen seems to be doing some sort of sideways consolidation. We could be doing this A, B, C. Okay, so this could come a little higher first before we go lower. Again, just gotta watch bonds really and see what the other yen pairs are doing, because they will move together. CAD yen, interesting. Okay, let's have a look at CAD yen. I'm saying interesting like it's a surprise, but it is actually on my list. It's just not one of the key ones that I look at. I have it, but I don't really look at it very often. I prefer really to trade the US majors, but CAD yen, similar situation. Maybe an ugly head and shoulders, but it is ugly. This is the weekly as well, so we probably want to go down to the daily, but we probably want to be bearish, right? Just based on this price action. Could get a massive triangle. We could maybe come up and test these levels up here and create a smaller triangle. It's not that clean price action on the weekly. On the daily, we've not had 5 clean waves anywhere on the daily, right? This is pretty much just sideways. We've had it, it's overlapped. There's nothing really clean about it. So for me, I would just be waiting. It's possible that this could see higher levels, because this action to the price action to the downside is just not very impulsive. Even if we try and count that as 1, 2, 3, 4 overlapped, so can't be relevant, right? It could be ABC, then we've had 3 ups, that would be X, and then maybe ABC. So that could have been a double zigzag. There's all sorts of possibilities it could be. Is that a channel? It looks like we broke back inside it anyway, so it wasn't that relevant. So CAD yen, I wouldn't advise, to be honest, to take any action on that at all. I think this could just turn into a massive triangle. So I would just stay aside on that. This trend line though is pretty key. If we do head lower, the weekly has shown us that we've got a pretty powerful trend line down here. However you want to draw it, we're going to draw it against those 2 lows, include that 3rd low over on the right. If you want to include the 2nd low here, so you've got now 4 points of contact. You can't be too specific when it's on the weeklies, especially when you've got spikes as well. You can't take it 2 pips, 2 pips below this trend line and start taking short positions. You've got to wait for 100 pips below and then a small pullback, because on such a large time frame, 2 pips it doesn't mean anything. It's nothing. I've got the US dollar Norwegian kroner. Now this is correlated with crude, and what looks like a powerful move up and a correction. Looks like we could be in a 5th wave. I can't really see because of all those annotations I've got, so get rid of them for now. So we were looking for a retest and then a spike higher. Didn't quite get that retest. We could maybe come back and retest this 8.4 level. It's a possibility. And that will have give us, like a ABC up there. And then it can head higher. That would be dependent on crude, right? So we need to see a little bit of strength in crude or dollar weakness, and then weakness in crude here, which or dollar strength, right? So you need it's basically that very similar to dollar Canadian. The dollar peso, which is the Mexican peso, huge triangle by the looks of it. Possible that ABC is possible. If we go to the 4-hour, I think still valid. Now broken below channel. Next up is triangle support. We've had this strong move down, so we can be bearish this. It's not something we look at, but the Mexican peso is it's an emerging market currency. So what that means is basically when people want to take higher risks in the market, they tend to move away from gold, move away from bonds, and they move into stocks and emerging market currencies. So things like South African rand, the Mexican peso. Is it the ruble? Russian ruble. They're all emerging market currencies, and they correlate with stocks. So when it's risk on, which means stocks are going up, these currencies seem to benefit. So that would mean that the peso would come down. So if we could see continued strength in stocks, continued strength in other emerging market currencies, then we'd see this come down, and it would mean that bonds come down as well, right? And gold goes up. So all these things come into play, and it's essentially risk on or risk off. And what that just means is that risk on means that people are taking riskier bets in the market. Risk off is a flight to safety. So risk off means that they switch off that button, and everyone goes, right, okay, let's buy yen, let's buy gold, let's take safer bets, let's get rid of our stock exposure. So with the peso, this would be a risk on move to the downside. So if we're bearish this, we want to see risk on. So we want to see bonds drop, we want to see stocks drop. Sorry, stocks go higher. Sorry for the confusion there. Bonds drop, stocks higher. So I'm not really fully convinced, to be honest, until we get below this triangle, just because this isn't really that clean a channel. This correction isn't that deep either. But you could probably wait for a break below here and then short it, because I'll probably say that this is your first leg. ABC will be your second, so your third leg is going to be way down here at 18 probably, if we measure that. So if we go straight down from here, 100% is at 1785. So that's where you'd probably be looking for the downside, if you're looking for the downside to continue in this. Now triangles don't always necessarily mean that they're going to go lower. They can break either direction. It's just that we had such a powerful move to the downside that I prefer to be bearish. But this could have been like a correction to the upside, so a correction up, and then the triangle for some sideways, and then the correction continues. Maybe it makes a flat, tests 22. Who knows? Right, best thing to do is wait for a break. So I'd be waiting for below 19. And see if you can make it with below 18 really. I think that's it. That's pretty much all I want to look at. Did we look at Bitcoin? I don't think we did. Bitcoin, ugly as ever. Okay, so we had 5 up. It's not overly convincing, bullish wise, but we're hanging in there. Bitcoin moves in funny ways. It kind of, it can rip or it can dump within minutes. It's not that reliable, but it does, it follows the rules reasonably well. If we get above 4,200, let's just adjust these. You probably look at something. You're gonna get something up there. If it breaks 4.2, you're probably looking. The best thing to do, obviously, is wait for 5 waves to complete, and then start weighing up if you want to take a long position on any pullbacks. But for now, okay. So we had the wedge. We've broken back inside the wedge. It's important that we extend this then. So if you have a look on the hourly, you can see that the wedge, we're back inside the wedge, but we're very close to resistance. So we probably should get some reaction, whether it's up or down, but we'll get it soon, right? Within the next week. For now, if you're in if you're in a long position, you can probably stick with it. You can probably put your stops down here. If you're in a short position, you probably want them above this wedge. We start breaking above there, then I think it's going to 5,000. Okay. So that's it. I hope this video was helpful. The reason I have done the recording is just so that we could go into a lot more detail on some of these things, as I don't want to do the webinar at 8 o'clock and then keep you for however long it's been. Okay. Next week we will be live again. This one was to really just give you an idea of everything, because we haven't had a proper webinar in a while, to kind of go over everything in detail. I think last week we just went over the alerts that we had open. But currently we're in the dollar card, we're in gold, and we're in a third, aren't we? Are we in a third trade? Oil. Yes, crude oil. Forgot about that. We did look at it, didn't we? We've looked at crude. Yeah, we're in a short. Okay, cool. That's good news. You know what? Sometimes I forget what I've got open myself. Yes. Okay, cool. So there's not necessarily any changes anyway. If we see a breakdown in crude, I'll happily move stops lower. Okay, well that's it. That's everything for this week. I'll see you guys in the chat room anyway. If you've got any questions, just let me know in the chat room, or you can give me a call. I'll post a link to my calendar. I've had a lot of people, actually, it's worth noting, a lot of people do keep ringing the number in the emails. Now, obviously my mobile number is on the email, so you can call me. But if you're going to call me at 9-10 o'clock at night, it's not likely I'm going to answer your call. So if you're going to ring, just at least do it at a reasonable time. I'll try to be as available as possible for you guys. But I'll post a calendar link. You can actually book me in for a proper 30-minute kind of appointment. At least then I can get some stuff prepared for you, or you can prepare some questions yourself, and we can organise it properly. Okay. But I'll speak to you guys later. Good luck this week, and see you in a bit. Cheers. Bye.